looks like the numbers are just hitting here as we go through adjusted EPS.
I don't think, yeah, adjusted 255 would be still quite a bit below, right? Yeah. The 299 is what I have. You have 298. So 255 sales, 14.34. That's right in line with expectations, right? 14.325. You know, they've got more than just machinery. They've got financial products revenue at 712. Machinery, energy, and transportation, 13.6 billion. Now, 2019 is seen at 1175 to 1275. That's a pretty big range, but it certainly...
How does that compare, Stephen? Because we're seeing
well,
the stock
it's 1273 is the estimate. Okay. So if it's 1175 to 1275, they got to hit the high end just to get to where the street is right now.
Look at shares of CAT in the pre-market down 3.5%.
4.5 now. Yeah, 4.25.
Yeah, 4 plus, taking the Dow along with it, by the way, in terms of the implied open, down 164 right now. We're still looking for the commentary as we go through the report.
Actually, I think this is a good thing.
What?
I'm going to go the other way on this.
Whistling past the graveyard? What, a year long?
I think I am. I'm not long, actually. We're not long or short.
Okay.
But I do think this is a good thing, and I'll tell you the reason is that everybody is obviously concerned about the economy rolling over, the CapEx numbers. You heard Steve just talk about those. What we need to do is we need to de-risk this story. And I'll tell you, the buy side right now thinks all the numbers are too high. They all need to come down. This is going to do that. It's going to de-risk the story, and then people are going to feel like they can get back in, because this is a very cheap stock.
Well, we were down 108 on the Dow. We're now down 155. So 4 times 7 or 8 is what, 30 additional points.
Do you extrapolate stuff based on so far what we've seen from Caterpillar? Do you say, oh, industrials, I'm a little worried now? I mean, we did get URI last week, which is quite good. So for every bright spot, there's a negative.
Well, we also had a bunch of the rail companies that also did quite well relative to higher expectations, because rails have actually hung in pretty well. So, look, I think expectations were, as I said before, the risk reward was not so great because it's already rallied. CAT's already rallied 20%. The question is bad news good news? So it was for the semiconductor companies, and it was for semi-cap equipment. Is this also now the case for the industrials as well, especially the most cyclically exposed? So I think you have to hear what they have to say on the conference call. They'll give you a lot of commentary and a lot of color, and so I don't want to really rush to judgment right now. I think I agree, though. The stock is extremely cheap, and you know, free cash flow yield of 7% and a dividend yield of 3% and 11 times forward.
In cash, they've got $8 billion in cash.
Yeah, so I mean,
at the end of the quarter.
They're much stronger as a company than they have been in the past. And as I mentioned, the new management team is very focused on that.